NVIDIA is one of the fastest growing companies in history, yet today it's trading at less than 20 times forward earnings. Now look at this. Arista Networks is an incredible business, but despite growing significantly slower, investors are paying more than 42 times forward earnings. So something doesn't add up. Either NVIDIA has become surprisingly cheap, Arista has become surprisingly expensive, or the market is pricing in a risk that isn't immediately obvious. Today we're going to find out which one it is, but before we begin, one quick note. Because NVIDIA reports on a January fiscal year, while Arista follows the calendar year, I'll show their historical charts separately throughout this video to keep every comparison accurate. At the end of every key factor, we'll declare a winner. And by the end of the video, we'll know which AI infrastructure company is more attractive. Let's start with the most important question. If AI infrastructure keeps growing, who can actually defend their profits? Morningstar gives both companies a wide moat. That's rare, but the reasons are very different. So let's start with Arista. Arista has quietly become the leader in high-speed cloud networking. Over the last decade, it has steadily taken market share from Cisco in data center switching, particularly among hyperscalers like Microsoft, Meta, and Amazon. That isn't easy. Networking equipment has enormous switching costs. Customers don't replace the backbone of a data center unless there's a compelling reason. Arista built its reputation by offering faster innovation, a simpler software architecture, and exceptional reliability. Once its operating system is embedded into a customer's network, switching becomes incredibly expensive. Now let's look at NVIDIA. Its moat is built around something completely different: CUDA. Developers have spent years building AI software around NVIDIA's ecosystem. Changing GPU vendors isn't just replacing hardware, it often means rewriting software, retraining engineers, and accepting lower performance. On top of that, NVIDIA now sells complete AI infrastructure: GPUs, networking, software, interconnect, entire AI factories. That creates a remarkably sticky ecosystem. So who wins? Arista has built one of the strongest networking businesses in the world. But NVIDIA's ecosystem has become the industry standard for AI computing. So for the moat section, NVIDIA wins by a narrow margin. Every chart and every financial metric in this video comes from Fiscal.ai. It's the platform I use for every stock analysis on this channel. Link in the description for 15% off. Now let's see which company converts that moat into profits. Great businesses don't just grow, they earn exceptional returns. Let's start with Arista. Return on invested capital has steadily improved over the last decade. Today it sits at around 51%. That's phenomenal. Very few companies consistently generate returns above 50%. There's been a slight decline over the past year, but even after that, Arista remains one of the most efficient businesses you'll find anywhere. Now NVIDIA. This number is almost difficult to believe. Return on invested capital is roughly 135%. That's one of the highest figures I've ever analyzed. It has also eased slightly from last year's extraordinary peak. But we're still talking about a business generating well over $1 of operating profit for every dollar invested. Return on equity tells a similar story. Arista earns an excellent 31%, NVIDIA exceeds 100%. Both businesses are exceptional, NVIDIA is simply operating on another level. Arista has been one of the best compounders of the last decade. Revenue has grown at almost 26% annually. Net income, nearly 39% per year. Earnings per share, roughly 38% annually. Those are extraordinary numbers. The only reason earnings per share grew slightly slower than profits is modest share dilution. Nothing particularly concerning. Now compare that with NVIDIA. Earnings per share has compounded at an astonishing 66.5% annually. Almost double Arista's already exceptional growth. And analysts still expect NVIDIA to grow earnings around 40% annually over the coming years. Arista, around 25%, that's still outstanding, but it's a completely different growth profile. If growth alone determined investment returns, this round wouldn't even be close. This round is much closer. Arista has something investors love. No debt, zero. It also holds more than $10 billion in cash. That's an incredibly strong balance sheet. Free cash flow has compounded even faster than earnings, growing almost 45% annually over the last decade. That's exactly what you want to see. Now NVIDIA. NVIDIA holds more than $62 billion in cash against only $11 billion in debt. So effectively, it also has a massive net cash position. Free cash flow, almost $97 billion, growing more than 63% annually. That's perfectly aligned with earnings growth, which tells us those profits are translating into real cash. Honestly, it's difficult to separate these businesses financially. Both have fortress balance sheet, both generate enormous cash, and both have tremendous flexibility. Now we arrive at the question that probably made you click. Which stock actually offers the better investment today? Let's begin with Arista. Arista trades around 42 times forward earnings. Historically, its median multiple has been roughly 32 times, so investors are still paying a premium. Now NVIDIA. Forward earnings only around 20 times, despite growing materially faster. That immediately raises an obvious question. Why? To answer that, let's look at the price-to-earnings growth ratio, which accounts for long-term earnings per share growth. Arista's long-term PEG sits around 2.3. That's expensive. For NVIDIA, it's around 0.5. That's remarkably attractive for a company growing this quickly. When I started researching this comparison, this wasn't what I expected. I assumed Arista would look cheaper, instead the opposite happened. Today, NVIDIA appears to offer significantly more growth at a significantly lower valuation. But there's one important risk the numbers alone don't capture. NVIDIA's most advanced chips are manufactured almost entirely by TSMC in Taiwan. Any escalation in geopolitical tensions between China and Taiwan could have a material impact on NVIDIA's supply chain and investor sentiment. Arista also relies on suppliers in Asia, but its manufacturing base is more diversified. And its business isn't nearly as dependent on a single strategic choke point. That doesn't fully explain why NVIDIA trades at such a large discount, but it may explain part of it. In other words, investors aren't just pricing growth, they're also pricing in geopolitical and product concentration risk. Let's put the scoreboard together. NVIDIA wins on the economic moat, returns on capital, and growth. For financial strength, it's a tie, and NVIDIA wins again on evaluation. Arista Networks is an outstanding business, with a wide moat, exceptional management, and a fortress balance sheet. But today NVIDIA stands out. It's growing faster, generating high returns on capital, maintaining an equally strong balance sheet, and trading at a lower valuation. Part of that discount reflects geopolitical risks tied to Taiwan and TSMC. But even after considering those risks, NVIDIA still looks more attractive at current prices. Arista remains one of the highest quality companies in AI infrastructure. But if I had to choose today, I'd prefer NVIDIA. Now I'm curious to hear your view. If you could only own one AI infrastructure stock for the next 10 years, would it be NVIDIA or Arista Networks? Let me know in the comments and tell me what stock I should cover next.